Francis, what elements of technical analysis actually work? Are indicators one of them?
Technical analysis, it works for me, certainly, but I've selected the elements that I believe work, and it does have limitations. And there are certain aspects of technical analysis that I largely leave aside entirely and are critical of. This is quite controversial as well. So I feel one of the key things people get introduced to in technical analysis, they get straight away taught indicators, and they get taught moving averages. They get taught a variety of what I call the lagging category of derived lines. So essentially price data, which is the facts and the truth and the reading of the tick, is being de-emphasized. And often I find early traders will have, price chart here, and then 2/3 of the chart will be filled with 5 or 6 derived lines, which are essentially mathematical formulas placed on different points of the price data. And there's nothing predictive about that. But what tends to happen is people begin to make associations psychologically that there's a predictive element. In fact, most of the ticks up in the indicator will always be generated by first a tick in the price. So inherently, most indicators are lagging. And everyone will say, oh, but you got the warning there. Retrospectively, when you move the point that you draw the line up on the indicator, it actually looks like it gave early warning. But only after the price data has moved it has it done so. So people get confused and they start to think the tail is wagging the dog. The price behavior is your best and should be your primary part of your analysis. And I feel personally that there's too much fascination on indicators. The other thing that is wrong with indicators for me is that invariably people get into the habit of calling tops and bottoms. So if you have an RSI, they say, oh, there's divergence, it's not going up as quickly, therefore it's losing some of its momentum. But actually, if you've had a very strong impulsive move on the price, any move up after that will look less significant. However, you can go into a trend for a very long time. So it has people always taking the other side of the market in terms of the trend. So it actually encourages not following the trend. And so those elements I'm very critical of. Volume is a notable exception. Volume can often precede price moves, and I value that. And things like Bollinger Bands that capture volatility, because I trade the expansiveness of the volatility and the tightening of the volatility as part of my strategy. I find things that illustrate that very, very useful. So it's not a broad brush, but most indicators, unfortunately, have limited value in technical analysis, and I wish the art or the science emphasized them far less. I think it's killing a lot of traders' future and leaving them feeling a bit helpless.